Our next presenter, pivoting to nickel and lithium now. Our next presenter is Steve Norgard, Managing Director and CEO of Widgie Nickel. Steve is a mining engineer graduate from WA School of Mines here in Cal, with over 30 years' experience in the industry exploiting base metals and gold in both underground and open pit environments. He's worked across many jurisdictions spanning the globe, including Canada, Southeast Asia and Australia. Steve is revisiting old stomping grounds with some of his early underground time in the early 1990s, spent in the very deposits Widgie now has aspirations of redeveloping. Welcome, Steve.
Thank you very much. I think it was 18 years ago I last presented at Diggers and Dealers, so in Widgie's second year of existence, thank you very much for inviting me back. Much appreciated. I relish the opportunity to tell the story. Widgie Nickel, we listed on the Australian Stock Exchange in September of 2021, floated on the back of the Mount Edwards nickel assets we were vended out of Neo Metals. That project has a significant endowment of nickel, some 170,000 tonnes, that dates back from exploration that started in the mid-1960s. It has supported a production profile. Some 30,000 tonnes of nickel has been produced over that ensuing period of time. They exploited that production from 4 of 12 nickel resources. Significantly, it was mined for nickel. There's been a huge amount of exploration that's done, but we're leveraging off the fact that a lot of that drilling only identified nickel as part of the data set. Through the process of us drilling over the last 2 years, some 110,000 metres, we're populating that data set now with all of the byproducts associated with nickel, namely PGMs, and I'm glad to say that we are finding significant value in that, which we believe will add significant value to the project looking forward. It's ironic that it was all about nickel, but very, very quickly we found that indeed the location of our project did have lithium potential. That was largely an artefact of interest shown by others. We've captured that value, and indeed that figures prominently in our story going forward. Share price performance speaks for itself. We're still above our listing price, so I'm happy for that. Recently raised $12 million, so we're well funded, in a great position. A company is quite often the hallmarks of its success are based on the people within that organisation. I'm very, very glad that our team is poised for success going into production. We've got a broad range of expertise at board level with a bias towards nickel, so the future's looking good for us. The company was formed on and its strategy revolved around nickel. By virtue of the fact that we've discovered lithium in that ensuing period of time, we've been able to rationalise that strategy, and now we see ourselves in a wonderful position where, through the efforts of the team on our lithium front, we've fast-tracked that, and I'm very, very assured that we'll be able to generate revenue from our lithium endowment prior to the end of 2023. Surplus cash flow from that we can reinvest in further exploration for both nickel and lithium. But importantly, it's allowed us to step back, and rather than try to fast-track our nickel aspirations, we can step back and now set the bar a bit higher and look upon the entire resource base and potentially establish a standalone proposition. So we're in a strong position now as a result of the lithium. We live in a high-cost environment, and inflationary pressures are prevalent, so in order to be able to have a successful project, it's very, very important that we minimise our costs at all opportunities. So with regards to our nickel strategy, whilst we were very, very keen to pursue a toll milling strategy on one of the 12 resources we've got, we've stepped back and said maybe we should be approaching this as a standalone opportunity. There's some significant advantages for the project as such. We've gone through a process of metallurgical test work and are now starting to understand that a bespoke flow sheet is far more appropriate for us. We're able to increase metallurgical recovery, and importantly, some of the penalty elements you see, we're able to minimise those, which puts us in a much stronger position to get a high degree of payability from the project. Being a standalone producer also gives us capacity to go out to a broader range of potential buyers and potentially increase the payability of our products. Milling on site obviously affords lower costs. We're not going to incur significant transport costs associated with the project, and being an owner-operator, we see a lower cost structure. These cost efficiencies will lead us into a lower cost environment, which will allow us to exploit the entire resource rather than just picking the high-grade portions. The aim being to exploit our entire resource rather than just select portions. What puts us in a position to be able to do that is our lithium endowment, which through the endeavours of a select few within our workforce, we've been able to advance very, very quickly. On the 3rd of October 2022, we announced some rock chip samples. Subsequent to that, we've completed 3 phases of drilling, announced a maiden resource. We've designed optimised open pit around that, sought approval for that through the regulatory process, and we've received that now, and we're on the cusp of being in a position where we can start mining, all against a backdrop of offtake agreements that are in an advanced state of progress. So a little bit about the project. Apologies, a little bit ahead of myself there. As I said, we're located in the Eastern Goldfields region of Western Australia, only about 100 kilometres south of here, some 240 square kilometres of mining tenements, ideally located right beside the main arterial route that joins Perth with the eastern seaboard. We've got the benefit of potable water pipelines, a railway line that runs proximal to our project area, natural gas pipelines, and a vast array of power infrastructure, which is really, really important for a potential project developer. We're in a very, very unique situation in the sense that our project, which has 12 separate deposits, all of those are proximal to each other. They are all, effectively a 15-kilometre strike length. So the project affords itself economies of scale, where we can bring on additional mines without having to duplicate overheads, thus achieve economies of scale. An area where we've spent a significant amount of time and effort is the area we collectively call Widgie South, which is 3 ore bodies that are in close proximity to each other, Widgie Townsite, Gillett and Widgie 3. These 3 separate resources in aggregate at this point in time are about 70,000 tonnes of nickel metal. Our drilling has been very much focused on increasing levels of confidence, but we've also had significant exploration success, specifically on Gillett, where initially this resource was about 850 metres in strike length, and now through incremental success it's in excess of 1,500 metres long. However, there's still significant opportunity for us to grow this resource in this area here and further to the south, where we see significant upside and the potential for Widgie Townsite and Gillett to coalesce. We've started a scoping study. We're probably halfway through that. It contemplates exploiting these 3 resources, and they'll be the mainstay of our project. All developed from surface, so we mining shallowly. We can achieve a production rate we contemplate in our scoping study of over 800,000 tonnes of ore, producing about 10,000 tonnes of nickel metal in concentrate. Widgie town site's our largest resource, and less than 1.5 kilometres to the north, Widgie 3 will be exploited along with the Gillet body of mineralisation off a single decline access. Still a lot of exploration upside. We very recently announced drilling results from infill drilling at Widgie town site, but what really excites us is the cluster of green holes you see at the top and the purple hole where what we see in effectively RC pre-collars is a significant body of high-grade nickel sulphide mineralisation higher in the profile, which wasn't intended. This lies out in this particular area on an adjacent contact and represents a very high order priority exploration target for us going forward. Second project area, only about 4 kilometres to the north, is the Widgie Central area, which comprises, from a nickel perspective, Munda, Inco and 26 North. Munda is the highest grade resource we've got. We've completed drilling of this now, and it's in the process of resource recalculation. Inco is another large body of lower grade mineralisation which lies proximal to what historically was the largest nickel producer in the field, the 26 North mine, which produced over 25,000 tonnes of nickel metal and was developed down to about 500 vertical metres. There's still over 15,000 tonnes of nickel metal remaining. The irony is that our Faraday resource is only 500 metres away from the shaft at 26 North. Modest in size, we've only drilled it down to about 60 vertical metres. Very favourable geometry, amenable to very low cost open pit mining. We've done a lot of work in this in the short term. We have got a high grade core to it, and importantly it's all in oxide material. The pegmatite unit itself is competent, but the surrounding rock we expect to be free dig, so it'll support a low strip ratio open pit. It's certainly not finite by any stroke of the imagination. We've done step-out drilling, and it warrants further drilling to be able to increase the size of the resource. We've also had further exploration success to the north, which is early days. It's drilled on an 80 by 80 pattern, but the Trainline prospect will see growth in the overall lithium endowment. Heading further to the north, our 132 North development or resource, which we've again drilled now and will form part of our scoping study. It will support an underground operation. And to complete what we're currently considering as the Armstrong resource, which we've now got to a very high level of geological confidence. It's already been through a scoping study process and is an inherently robust operation, we believe, going forward. To complete the overall resource picture, we've got these 3 resources. Further to the north, another 45,000 tonnes of contained nickel, which we'll consider later on. So, in summary, the company's very much been focused in the first 2 years of its life on the top 6 resources you see here, representing about 100,000 tonnes of nickel metal. We're going to recalculate resources during the forthcoming 6-month period and see them hopefully transfer into indicated. We've got a scoping study underway on those 6 resources, which will come out in the next 3 months, which will guide us through the remaining feasibility process. We think we've got a robust investment case, and to think that we've got another 70,000 tonnes that we can still bring on stream thereafter is a wonderful situation for us to be in. So, in summary, from a value perspective, we believe that we're going to be self-funding going forward. Our lithium DSO opportunity is a a wonderful catalyst for us in the near term, and with that it allows us to look at our project in a more wholesome light, looking at how we can do things better and stand on our own 2 feet. With the surplus funds, reinvest in further exploration both on the lithium and the nickel, and build a robust business case looking forward. All in all, whilst it was Widgie Nickel, I can see we're going to win looking forward on the nickel lithium front. Thank you.
Thanks, Steve. Just a very quick question from the system. What's the likely average production rate on the DSO lithium per annum?
We expect our initial probably 6 months to exploit the entire resource that we've got.
Okay, thank you.